Yeah, good morning, everyone. So yesterday we saw US market correcting, uh, mainly led by the expectation of Fed, and then also Fed has increased the interest rate by 0.25%. Fed has not expressly said that this is the end of the rate increase, but it's more of an indication that the June month meeting, Fed may not be increasing the interest rate, and now they will pause the interest rate. But the big different thing which Fed has said that the inflation is sticky and will take time to come off, and Fed is not looking to cut the interest rate by year end, which was the expectation of the market. So that has come a bit negative for the market that Fed is not likely to cut back the interest rate towards the end of the year. Then a lot of small bank are again showing stress. Now two more banks are coming off and has declined in aftermarket in US. The PacWest Bank down was down by 50% after market, after the closing of the market, as they said that they will be looking to merge with some other bank or raise equity. So that is showing some stress. Then few more banks declined by over 10% is Western Alliance Bank and Geom Bancorp Bank. So all these small banks are continue to face stress uh, even now also, after three bank got uh, discontinued in the US, now few more banks are coming off. So that is creating bit concern in the US market, though depositors' money are safe as the Fed has come up with a scheme which will safeguard all the depositors' money. But this is creating some stress in on the lending side and can have some impact on the growth of the economy also. So need to be carefully watched these event development in the coming period. Apart from that, oil also came off very sharply and more of a continuation of previous day. Again, it declined by around $3, uh, mainly on concerns that the economy is likely to slow down in coming period. And last week, gasoline inventory came much higher than expected. So that has continued its decline. Iron ore and steels are more of a flattish. So overall seems more of a cautious environment in the world market. So need to be careful. We had run up substantially in last uh, 30, 40 days. So quite possible there could be some profit booking we may be seeing at higher level. So we may see today some profit booking as well. Now I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. Today we expect gap down open, and we saw the some profit booking today's session. Technically, immediate support place for Nifty around 18,000, 17,970 at downside. Below 17,970, then we expect further sell off towards 17,920, 17,850 mark in downside. Upside, we last two trading session we saw that Nifty facing the resistance around 18,200 to 40 level. The next immediate resistance place 18,240 and upside. To today we saw some profit booking in higher end. Bank Nifty also trading the high range, high resistance point that comes around 43,300 and 500 in upside. Immediate support place 43,000. Below 43,000, we expect to fall towards 42,700, 42,500 at downside. So both index trading in upper resistance level, but next immediate support also important. That is 43,000 for Bank Nifty and Nifty 18,000, 17,970 is a important support zone. Nifty Finance also trading near the resistance zone that around 1930 and First support level around 19,140 and second one is 19,950. Below that level, we expect further profit working seen in finance Nifty also. Stock specific, Adani Enterprises look weak. TCS also trading facing the resistance and upper range. It's trading near the 3,200. Below 3,140, we expect some pressure in TCS. That's it for technical derivative I can carry.
Yes, thank you. Good morning, everyone. So on the derivatives data front, if we look at the overall data, the Y positions which are getting right now, the positioning is like from 17,900 to 18,250 strike. Uh, Overall scenario, if we look the market wise, 18,250 will be the immediate resistance where we might witness some breakout for the market. While on the flip side, we are seeing that 17,900 to 18,000 strike put right a position on the monthly basis are added on strongly. So till the time it's not breaking 17,950 level on the lower end, till that point of time, we might hold a long position. In next 1 to 2 trading session, we might witness some sell off from the upper range because Nifty is trading currently at the resistance of 18 to 50 level. Where I said that on a monthly basis, almost 16 million position of a call writers is being added at 18,200 level. So clearance is very much important about that level for the surpass towards 18,400 to 500 level. So currently Nifty will trade in the range of 7900 to 18,200 level. The positive factor which turned out in yesterday's session was India VIX. India VIX came down towards 11.84 from 12.50 level. As I said in previous sessions also that once if India VIX goes above 13.5 level, then it might get some cautious and panic situation in the market where profit booking will increase heavily. But till the time India VIX is not going above 13.5 level and Nifty below 17,950 level, till that point of time we should hold long positions. We might see some pullback from the selective sector because we are seeing that mid cap and large cap counter are still holding some positive trend market right now from last 4 to 5 trading sessions. As from the current scenario, overall on the stock specific and sector specific front, we expect a fertilizer counter to show some more positive strength. Selective counter from fertilizer would be Chambal fertilizer. We have recommended a buy call also on Chambal fertilizer. We are expecting a Chambal fertilizer to show some positive trend because from last previous trading sessions we are seeing that heavy OI positions are getting added up near ATM strikes and the IVs are getting added at 300 to 310 strikes. So continuously buying we are seeing on the OI front towards the 310 level. So we might witness a strong buying from the Chambal fertilizer. Another stocks are like Apollo Tire and Bill. These two counters we are seeing that the fresh buying are continuously getting added up on daily basis, and we expect more buying trend to be expected in these two counters. So keep watch on these three counters. That's it on the derivative front. Thank you.
Good morning. GR Infra Projects has been selected as the lowest bidder for construction of a highway in Uttar Pradesh. The bid project cost is 737 crores. This is positive. HG Infra will sell its entire shareholding in four of its wholly owned subsidiaries to Highway Infrastructure Trust for an equity value of 531 crores. This will free up cash for the company and it will be able to reduce its debt. So will be seen as positive. On the result side, Cholamandalam Investment and Finance result was above expectation because of slightly higher other income and moderation in OPEX and decline in credit cost. Credit cost continues to decline every quarter and now this time it came at just 0.4% versus expectation of 0.7%. More importantly, what is driving the stock price is we think is the loan growth where AUM grew by 38% year on year and 12% sequentially, and company has crossed the 1 lakh mark, 1 lakh crore mark for its AUM this quarter. So growing at such high pace, at such a base is a commendable thing. In terms of what drove the growth, vehicle finance grew 27% year on year, loan against property 29%. Home loans, which has a low base, grew 51%, and the new businesses grew almost 5 times compared to last year. So when we talk of new businesses, they comprise mainly of personal loans, which they are getting mainly by partnering with fintech companies. That is more of a fintech angle. Then secured business loans as well as SME loans. So these new businesses together now form 9% of AUM compared to almost nil last year. And asset quality has improved on all metrics. Net NPA declined to 3.1% versus 3.8%. We are positive, and we think that outperformance that we have seen in the company in last couple of months will continue going forward also. Aavas Financials result is above expectation, led by strong AUM growth of 25% year-on-year and 8% sequential, and flattish sequential growth in OPEX. Asset quality continued to improve. Net NPA is now at just 0.7% against 0.9% previous quarter. We are positive on Aavas. Also, stock has seen a steep correction from 3,000 levels to around 1,400, 1,500 levels now. We think a further correction is not likely, and stock can be a compounder from current level. Thank you.
Good morning. MRF had announced its result. The result was above expectation. Revenue came in at 5,725 crores versus an expectation of 5,798 crores, growing by 3% sequentially and 10% on a YOY basis. EBITDA margin came in at 14.7% versus an expectation of 11.6%. The increase in sales was a result of growth in all product groups. The unprecedented increase in raw material prices, which was witnessed during FY22 due to COVID, and also the war in Ukraine, extended into the current financial year. Despite efforts being taken to pass on the cost increases in a graduated manner, the profitability continued to be low during the first 3 quarters of the year. However, with easing of raw material prices during the latter part of the year, the benefits of lower raw material costs resulted in better profitability in the fourth quarter. The company's board has declared a final dividend of rupees 169 per share for FY23. The stock is trading at a PE of 28 times FY24 EPS. Thank you.
Good morning. Solar Industries India Limited has posted results, and results were marginally above expectations, as revenue performance was ahead of expectations with approximately 47% YOY growth at rupees 1,929 crore. Operating margins were stable at 18.5% for the quarter, and net profit stood at rupees 206 crore, which was on account of better top line performance and stable margins. Company's order book stands at rupees 2,944 crore. The stock is trading at a PE of 40.6 times to FY24 EPS, and the outlook remains positive for the long term. Vishnu Chemicals Limited has posted results, and results has improved. Revenue grew flat at rupees 336 crore. The EBITDA margin improved at 18.2% versus 16% on a QOQ and 15.4% on a YOY basis. With regards to its annual performance, the revenue growth in both domestic and exports has grown at 36% and 26% on YOY basis respectively. The EBITDA margin stood at 17.4% compared to 15% in FY22, and ROC stood at 35% compared to 28% in FY22. The overall top line performance was largely driven by the value growth instead of volume. This was largely because of the plant shutdown for maintenance in the month of December. However, the management expects volume growth momentum to continue in barium chemicals on account of its uptick in demand over the last 2 quarters. Also, it expects chromium chemicals to pick up the production as there is no major maintenance of plant is planned for FY24, and the additional capacity of 10,000 tons per annum is expected to help the production to grow. The stock is trading at a PE of 14.2 times to TTM EPS, and we are positive on the stock. Thank you.
Yeah, apart from this, Tata Steel had a con call yesterday and indicated that the EBITDA margin which they had reported in this quarter are peak, and the coking coal cost benefit has already come in, and for the next quarter the coking coal cost will be higher by around $10 for India operations. And uh, apart from that, the prices are also seeing some corrections in Indian market. We had seen coking coal and coal prices coming off very substantially in last 1.5 month, and now steel prices are correcting almost around 1,500 rupees. It has already corrected in the open market, and same is likely to get reflected in the prices in the coming quarter as well. Apart from that, the European operation also, they are not seeing improvement immediately. It will take some time as next quarter the Netherlands operations will be partially operational, and also UK operations, their cost of fuel is booked for longer period, so they will continue to have a higher cost of fuel in the this quarter as well. So the results in the Europe is likely to remain subdued even in the coming quarter. So overall results going forward from here may not be improving. So the prices and considering that the steel prices are expected to come off, the stock is likely to remain range bound. Titan reported numbers, and the numbers were very good. The sales figure they had already disclosed, and the margins came in at 10.8% versus expectation of 12.4%. But company had an extraordinary sales of the gold ingot of around 1,055 crores. So if you exclude that, then the margins are then the sales will reduce, and considering that the margins are at 12.1%. So which is more of in line with what was expected. Management has indicated that the long-term growth trajectory of 20% CAGR is likely to continue. In the quarterly update in the first week of April, company said that April is seeing some softness in sales. But now in the con call, they said that the second half of the April has seen good revival, and now, due to wedding season and demand from the gold, the growth is in line with what their expectations are. So going forward, the growth is likely to continue strong for the Titan. No doubt, valuations are a bit steep at around 60 times FY24 earnings. So moving up from here will be a bit difficult. So any good correction in the share price can be used to buy this stock. And current prices, the holding can be maintained. Then Bajaj Consumer came up with the numbers, and the numbers had shown improvement after a long time, mainly driven by the sales growth. So the sales has increased by almost around 9% quarter on quarter and 14% year on year. So that has come after a long time, and this has got reflected in the gross margin as well because of the reduction in the raw material prices. Some benefit of the reduction in the raw material prices has already been factored into this result, and company got benefit of around 100 basis point. The ad spend remained constant quarter on quarter at around 41 crores, but due to higher growth in the revenue, they got the leverage benefit, and the percentage term ad spend came off by 150 basis point to 17.5% from 17.2% from 18.7%. So that has resulted into EBITDA margin expansion of almost around 100 and around 250 basis points. So that will act as a positive for Bajaj Consumer. So the outlook for Bajaj Consumer from here is positive as well. And ABB reported very strong numbers. The result has shown good growth and was above expectations. Uh, The order booking also had shown improvement both quarter on quarter and year on year. But valuations are at 65 times, so the overall outlook continue to remain positive for ABB. Now results for next week, 8th. So Aarti industry is likely to report numbers. Quarter on quarter margins are expected to decline further. So result is expected to decline. Then Apar Industries, which was consistently reporting good numbers since last 2-3 quarters, is also continue to maintain its trend. And on the higher base, it seems like difficult to surpass that. So results are likely to be okay. Carborundum Universal is likely to report improved set of numbers with year-on-year revenue growth of 39% and EBITDA growth of 62%. Substantial improvement in EBITDA margin is expected year-on-year, and quarter-on-quarter some marginal increase in the EBITDA margin is expected. So overall result of Carborundum Universal is likely to show improvement. The next slide result are likely to be okay set of numbers. Mahanagar Gas, MGL is likely to report numbers, and quarter on quarter revenue growth is likely to be more of a flattish, but EBITDA margin will show substantial improvement. So result is likely to show improvement of MGL. UPL numbers are likely to be okay. Revenue and EBITDA growth of around 8% year on year is expected. And VIP numbers are likely to show improvement year on year with substantial increase of 34% in the sales and 100% increase in the EBITDA. So that's all from us. I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we have seen gold and silver opening up, gap up, and one could be cautious as it is reaching the previous highs at 61 300 350 levels, and one can buy on dips around 61 100 to 61,000, which is a good buying zone, and maintain a stop loss of 60,900. On the higher end, fresh buying is expected if it is sustaining above 61 300 levels. And silver also, we expect buying interest to continue, and buying on dips is recommended. So buying around 77,100 to 77,000 is recommended. On upside, 77,850 to 78,200 is expected. In crude oil, prices are drifting down, but a pullback is expected. So pullback till 57, 57.50 is expected. So just for a trading purpose, one can buy for a pullback, maintaining a stop loss of 55.70. So and natural gas, we are seeing a range bound movement from 170 to 190. So for trading purpose, one can buy with a strict stop loss of 168. And copper, we have witnessed bounce back, and it is expected to rise further till 746 to 750. So as long as it is holding on above 738 levels, we expect prices to test 750 levels on upside. Zinc also, we recommend to buy around 235 to 3450, and maintain a stop loss of 232 levels. On upside, we are expecting again 240, 241 levels on higher side. That's it from me. I'll ask Utkarsh to take over from here.
Thank you, sir. Very good morning, all of you. In USG and
you witness that there is a gap down opening in the market. So if we get any pullbacks around 82.35 to 81.83 to 81.88 levels, one can initiate short positions with a stop loss of 82.05 levels for the target of 81.64 and 81.54 levels. In Euro INR, one can create long positions around 40.40 to 40.45 levels with the stop loss of 90. Well, in Euro INR, one can create long positions around 90.40 to 90.45 levels with a stop loss of 90.30 with the for the target of 90.65 and 90.686 levels. In GBP INR, one can take a long position around 102.58 levels with a stop loss of 102.38 levels for the target of 102.95 and 103.14 levels. Thank you.